Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm speaking with Sam Reynolds, Managing Director at Octopus Investments. He joins us as part of Livewire's Alternatives in Focus series for 2023. Octopus is one of the largest owners of renewable energy projects in Australia and Europe, managing north of $1 billion of assets locally. Sam, thanks for being here with Livewire today and taking part in the Alternatives in Focus series for 2023. For those who don't know Octopus, can you just briefly explain your investment philosophy and how you invest?
Yeah, great. So Octopus has been on the ground for 5 years, since 2018 in Australia, but we've been renewable energy investors probably for about 16, 17 years in the UK. So the way I look at the Australian business is into three parts: renewable energy infrastructure, energy markets and technology, and then what we call change. So renewable energy infrastructure, we're a fund manager. We raise money from superannuation fund, pension funds, as well as the wholesale market. We do development, so early stage, riskier part of the asset life cycle when you're organising planning, grid and land. We do asset management, so that means having engineers and grid people in-house. So that's the first part. Second part is energy markets and technology. So this is a team of data and analytical specialists. So this team is all looking at the future of energy. And this team helps us choose which assets go into our portfolio. So we want a mix of wind, solar and storage all in our portfolio, all generating, supplying electrons to the grid at different parts of the day. This allows us to create really interesting products when we're selling electricity, which hopefully will be sold for us providing a green block of energy over a 24-hour period. And the last part of our business is called change. So this is how we work with communities. It's our Indigenous joint venture, Desert Springs Octopus, that we're working with Indigenous communities up north. How we work with the government. Energy is challenging, and we want to be as close to the government and work with them on solving these challenges as we can. And change is a big part and part of our DNA, that we want to make a real lasting long-term impact.
Sam, just a quick follow-up question there. Those three stages of the process, aside from efficiencies, does that help add value at those various stages? Do they all complement each other?
Yeah, definitely. Look, the first part, fund management, development, investment, asset management, I wouldn't say that's the most differentiated part. I'd say the second part, energy markets and technology. This is a team of 4 at the moment that is just looking at the future of energy. So how should a portfolio look in Australia? So our portfolio wants to match the future of energy in Australia. And what this allows us to do is do more interesting products of when we're selling the electricity, selling the electrons back to the grid. And naturally in Australia, solar generates in the middle of the day, and anyone on the street will know that it turns off at night. What's quite good about Australian renewables is a lot of the wind sites that we invest into actually generate through the evening. So there's some natural, you can start to see a natural picture there. With the large storage assets that we're building, we can start to offer the market 4, 8, even more hours of firm power. That's baseload power. And that is really where the renewable energy market needs to head. And the last part about change is, look, this is just a longer term strategy, that how we want to work with communities. It's things like our Desert Springs Octopus, our Indigenous joint venture, working with Indigenous communities up north. And this stuff is really important to our DNA at Octopus.
Sam, you touched on Australia there. I want to dive in a little bit more. So the opportunity in Australia, is it because we're so renewables rich?
Definitely. Look, Australia's got a massive renewable energy opportunity. We've got plenty of land, plenty of wind and solar resources. Look, I cut my teeth on renewable energy in England, in London, the opposite. For obviously solar resource, but also land, and European nations are dealing with it. We travel quite a bit. I was in Singapore and Korea. I'm going to Japan in November. These countries also look at Australia as what we are, the lucky country, because we do have these amazing resources for renewable energy, but also mining and rare earth minerals and all sorts of things to help with the future of renewables. We're really lucky in that regard.
Sam, we're suffering through a bit of an energy crisis at the moment. Everyone knows that power bills are through the roof and industry is starting to suffer as well. Can renewables solve the problem, and how long will it take?
Good question. Renewables is only part of the solution. Right. So actually September was the lowest energy pricing for probably 2 or 3 years. Okay. And mostly because of new renewable coming on, keeping that energy price low, as well as lower demand in the market from mild weather. So things are happening. Some of the government policy is starting to create more interest in renewable, more electrons, more supply is being added to the market, which is helping with that, keeping that energy price lower. The other impacts around the world, the supply chain impacts. So renewable energy is not necessarily going to be cheaper because the supply costs of bringing in kit from overseas is still going to keep the energy price high for some time. Other things within Australia is we've got an ageing coal-fired power station fleet. So if you have a car that is 30, 40 years old, it's going to be costly to run than your cheapest hatchback on the market at the moment. It's going to be costly to upkeep, maintenance, all that sort of stuff. All of that features in your energy price, and that's what Australia is dealing with. So we need to change and adapt, and making sure we're looking at the next generation of energy to provide the supply that Australia needs over the next 10 years as these coal-fired power stations start to come off and reach the end of their natural life.
Sam, last time you spoke to Livewire, I think you had one project. It was Darlington Point. Now there's 4 major projects, I believe. So you've added 3 in the interim. Can you talk through some of the key milestones of these projects and a little bit about what they are?
So next project into the Oreo fund is Durlaka. So that'll come in at the end of this month. Durlaka is a 180 megawatt wind farm in southern Queensland. It's got a 70% PPA, selling 70% of the energy to the Queensland government. So a really strong asset. A great asset for us because it actually turns on and generates at about 4 p.m. in the afternoon, runs through the evening and turns off in the morning. So with some of the other assets we're developing in southern Queensland, solar and storage, we just announced a 1 gigawatt storage asset in Queensland called Blackstone that is under development. It allows us to create this energy mix of creating energy over a 24-hour period, which underpins quite a lot of the risk to our investors. Other assets that will come in, we've got our Fulham Solar and Storage, which is in Victoria, which is in Gippsland. That'll start construction early next year. That is a solar and storage asset that was also part of the Victorian government tender. So the electricity on that asset will be sold back to the Victorian government. And then an asset coming towards the end of next year, which is called Blind Creek, which is a large-scale solar and storage asset between Sydney and Canberra. But great part of the grid in between those 2 major cities, 2 major demand centres.
Sam, how important are the partners that you collaborate on these projects with? I can't imagine there's lots of teams out there that can build these big wind farms or solar farms. We
choose our partners on a number of different levels. Obviously, they need to have a strong balance sheet. We're signing a contract with them that can deliver the assets on time. They also, things like health and safety need to be really strong. How they communicate and engage with the community needs to be very strong. There's a number of different things that they go through to be partner with us. It's also the scale and the workforce that they're going to need to mobilise in rural parts of Australia that can bring these assets to life. And so it's quite critical that we work with the right people and teams on that.
Sam, what's in the pipe at the moment? Are there any projects that you can talk about aside from the 4 that you've just mentioned, even if you can't talk about them in detail? Like, what does the future look like?
So hopefully we'll be able to announce another storage asset before the end of the year, which will be in a state we haven't invested into yet. So that'll be exciting. The team are working on a number of other assets, but really what we're looking at is to have a really good mix of wind, solar and storage down the national energy market, down the eastern seaboard. That allows us state diversification, but also technology diversification of generating in different parts of a 24-hour period. Ultimately, for investors, that de-risks and improves returns over just investing in an asset by asset, just adding another solar asset here and there. Our strategy is a lot more integrated to building those different technologies and building that different times of when those assets are generating over a 24-hour period.
Sam, you've talked in the past about the grid being one of the challenges of investing in this space. Is it still the case, and what are some of the other challenges that you face?
Grid's definitely one of the challenges, but Australia's getting better. Look, Australia was adding big lumps of renewable energy over the last 2 or 3 years to the grid. And the grid operators were struggling just to keep up. But they're a lot more advanced in how these assets are going to be added to the grid. So we're quite advanced in working with the grid operators in getting that done. The other challenges are supply chain. So supply chain costs. Australia still imports all the kit for renewable energy. Yeah. Australia getting access to that kit that's over the US and other parts of the world is a challenge. At Octopus, we're working with some big strategic players in global renewables to help use their buying power to get the kit into Australia.
Just on the kit element, so if you're securing it, do you have to pay a higher price than what your US counterparts would pay, or do you just have to wait in a long line? Do you have to be in a queue?
Yeah, it's a bit of both. Yeah, you have to. If you're buying smaller quantities, it's generally at a higher price. If you're not signing the big contracts, then you may have to wait in line. And that's what we're hoping to do with some strategic partners, is to help use their buying power across the US and to get that supply into Australia.
Sam, you recently raised $250 million. Some of that money came from REST, the big superannuation fund. Great job, first of all. Secondly, how has the appetite been from institutional investors?
Yeah, great. Yeah, look, it was great to get REST on board. They're a great partner, very much aligned to our strategy in renewable energy and looking after communities and looking after Indigenous engagement. They're difficult to win, these superannuation funds. It takes a number of years. They're very diligent. I think quite rightly so. They're looking after the nation's savings. So difficult to get in, but they're great partners to have. Look, institutional interest in what we're doing has been very strong, but they do take time to land. But they're great partners once you have them in your stable.
Sam, you've talked a little bit about Oreo, but you've also got another fund, Oasis. Can you just talk investors through that opportunity and what's involved in the fund?
Yeah, so Oasis is our institutional fund. So we launched that 12 months ago. So that's what REST have gone into, Host Plus have gone into, the Nest pension fund from the UK are in. What we're doing is giving that access to wholesale investors, so that they can, a bit like they go into Oreo. So there's slightly different attributes to Oasis and Oreo. Oreo is a long-term yield fund, so slightly lower risk, better liquidity options. Oasis is a bit more risk because it has development. So development is a riskier end of renewable energy. It's when you're trying to organise the land, planning and grid, but done properly, it can be very lucrative, but it's also risky. So the returns are a bit higher. We're looking at net 10 to 12% returns for Oasis versus 7% for the lower risk Oreo. So, but there's also some lockup, some 5-year lockup on Oasis for funds. So it doesn't quite have the liquidity that Oreo has. But exciting for investors that want something a little bit up the risk and return scale, and they can mix between Oreo and Oasis if they're interested in some of that development risk.
Sam, last question. It regards the video series that we're doing today, Views from the Top. So you are in the middle of a fast-growing space in terms of renewables. You're seeing the whole landscape. What is the one thing that you've learned that perhaps you wouldn't have learned if you didn't have that broad view? What is your view from the top? When
we first set up in Australia in 2018, we really focused on selling to big institutional investors the green credentials.
Yep.
It was the wrong approach.
Okay.
In big investors, which is what they should be doing, they need to focus on fundamentals. They need to focus on the returns. It's what you want them to be doing, looking after your savings. And they're not nasty capitalists. It's just there's other charitable ways that you can give money away, but big super and pension funds, that is not the way. So we need to focus on the fundamentals of why renewable energy is right for your infrastructure portfolio, because of the returns, because of the risks, because of what we're doing in the community, etc. It has to make sense on that first. And the green credentials are somewhat of a benefit, but the big supers, they definitely want both, and they definitely want to lead with the returns.
Sam, thanks so much for chatting with Livewire for the Alternatives in Focus series for 2023.
Excellent. Thanks, Chris. Thank you for having me.
If you enjoyed that interview as much as I did as part of Livewire's Alternatives in Focus series for 2023, make sure to give it a like and don't forget to follow our YouTube channel because we're adding lots of great content every single week.